Well, hi folks, this is Lucky Murugesh and welcome to the Lucky Finance channel. Today is an important update. I'm going to teach you how to value Tesla stock and set a buy price. So thanks for subscribing. If you haven't already subscribed, please hit the subscribe button, hit the bell icon, and if you like the video, please hit the like button as well. Thank you. Going. I am not a financial advisor and all the information I'm providing you is purely for informational purposes only. Please consult your own financial advisor because investing in stocks is risky and you need to fully understand all of the risks involved. The information I'm providing you is something you can take and then you can add your own research to it and you can convert that to knowledge and hopefully eventually wisdom. Thank you. Let's get going. Normally, setting a value for a stock and a buy target price is a simple 6-step process. I have another video that you can take a look at for Apple, where we reviewed the earnings and dividends for the current year, the 5-year growth rates. We look at the PE ratios and the PEG ratios, and then we calculate the earnings and the dividends 5 years from now, and we use that to estimate the future stock price. So usually that works well when you have a company that has a history of earnings and dividends. For a newer company such as Tesla, which doesn't have this kind of history, it's a little bit more challenging and we need to do a much more fundamental market analysis. So let's take a look. The current earnings estimate for 2020 is about $4.32. And this is information you can get from the internet at seekingalpha.com, for example, also at Finviz or at money.msn.com. So $4.32 a share for 2020 earnings estimate. And there are no dividends from Tesla. They do not pay any dividends. Let's look at the 5-year earnings and dividend growth rate. This is where it becomes more challenging because, as I mentioned, Tesla does not have a history of earnings growth and dividends, and so it's really unknown at this point. So we have to do a much more fundamental analysis, which we will do right now. I researched the internet and got some information that we can use to calculate or estimate the earnings in 2025. So let's start right at the top here. So the first thing is this chart right here shows this is from Bloomberg New Energy Finance, and this shows the projected global electric vehicle sales over the next roughly 40 years. And you can see it's a pretty asymptotic graph. But by 2025, which is actually this chart right here, the estimates are for about 7.5 million vehicles. If you look at the current market share for electric vehicles, Tesla has about 29% market share. And at the end of the first quarter, basically Tesla reported 88,400 vehicle sales, which is very impressive. The rest of the pack here is Volkswagen, you've got Renault, you've got BMW, and you've got Hyundai Kia. But Tesla has about 29%. If you look at profits per vehicle, you can see here Tesla has been making a loss for a long time, but they just started to kind of turn a profit. In fact, the estimate for 2020 is Tesla will earn around $1,600 per vehicle. And this number, I think, will significantly rise by 2025. Here's a comparison also of what the rest of the automobile companies make. Porsche is one of the most profitable. It's over $15,000 per vehicle. BMW actually only makes around $2,500 a vehicle, which I thought was a bit surprising. And then Mercedes-Benz, you can see they've been going down over the years. And right now they have recovered a little bit, but they're still in the range of about $2,500 to $3,000 a vehicle. So Tesla at 1,600 for this year is not so bad, and I think that number could be a lot higher. So let's do a quick earnings estimate. So if you look at the total number of automobiles sold in 2020, which is post-COVID, that's about 90 million. So 90 million cars, trucks, SUVs, etc. will be sold in 2020. And the total number of electric vehicles in 2020 out of that 90 million is only 1.7 million, so like 2% of all the vehicles sold are electric vehicles. The production for Tesla in 2020, a rough estimate is about 500,000 vehicles sold, and this is something that they themselves have confirmed. And as I mentioned earlier, we said their market share was about 29%. So in 5 years, previously the chart that we looked at, there was an estimate of about 7.5 million vehicles sold. If Tesla market share remains flat at about 29%, then they should sell in the range of 2.2 million units. Assuming a pretty reasonable $5,000 per vehicle, the total profit for Tesla by 2025 will be 2.2 million multiplied by 5,000, or about $11 billion. That's a pretty good number. Tesla currently has about 187 million shares outstanding. So if you take the total profit of 11 billion and divide that by the number of shares outstanding, you get an estimate of about just over $58 per share of earnings for Tesla. And that's a really solid number too. Don't forget, Tesla has other businesses too. They have the solar roof business. They've also got the Tesla battery, the wall battery that they call. And they've been operating in both of those markets as well. Both are lucrative and they provide additional revenue and earnings for the stock. I think a reasonable assumption is that these additional businesses will bring in about 15% to Tesla's earnings. And so we can take that $58 a share we had earlier and add another 15% to that. And I think a pretty conservative estimate is for earnings of around $67 a share for Tesla. So keep that number in mind, $67 a share by 2025. Now let's look at the PE and the PEG ratio comparisons. Again, because this stock does not have the history, you have to kind of estimate these things. In 2020, the earnings per share was $4.32. Based on the stock price currently, the PE ratio is roughly about 189. That's pretty high. If you take the 2025 estimate that we just calculated of just over $67, and if you put in a reasonable PE ratio of 40, I think that's very reasonable for a company that is going to have a 5-year earnings growth of 73% based on that $67. I think that's a good number to use. And if you again have a conservative PEG ratio or a price to earnings growth of 1.0, that's a good number to use. So let's calculate the earnings and dividends in 5 years. Let's assume no dividends. So let's assume Tesla is not going to pay any dividends. For the earnings in 5 years, you take the current earnings, which is the $4.32, and you multiply by 1 plus the earnings growth rate, which is 73% over the next 5 years, divided by 100 and raised to the power of 5. So you can do this on your scientific calculator, on your mobile phone, or on Excel. And you get the earnings in 5 years at about $67. Let's just round it off. So based on that, the way we estimate Tesla's 5-year stock price is we take the total earnings plus dividends, so $67 plus $0 of dividends. We multiply that by the PE ratio of 40 and the PEG ratio of 1.0, and we get a share price of $2,680. If you look at the current stock price, which is hovering around 816, then the 5-year growth estimate is about 228% growth, or on an annualized basis, that's a return of close to 46%, which is very impressive. So if you bought Tesla stock in the range of $800 today, in 5 years it could be $2,680, which would be about a 46% annualized growth. Fantastic. So what should be your target buy price for Tesla? Now, if you wanted to generate, let's say, a 50% return based on the risk of Tesla stock, then a really good price would be the 5-year target divided by 1 plus the 50% return multiplied by 5 years, which would give you a price of about $765 a share. But since the stock market is unusually volatile right now, and it would probably be prudent to derate that price by another 30%. And that would give you a stock price to buy price of about $535 a share. I feel very comfortable with that price. Risks and concerns. Oil prices remain low. Oil's trading between $20 and $30 a barrel. It went as low as $10 a barrel a few weeks ago. And certainly that can slow down the move to electric vehicles. I think a lot of countries and states are in the process of removing incentives to buy an electric vehicle, so that could slow things down a little bit. I think the most important thing is, will Tesla be able to keep up with demand and manufacture 2.2 million vehicles 5 years from now compared to the 500,000 that they will make in 2020? That's a big surge. And we'll have to see. I mean, Elon Musk and his crew are very capable and they have done this in the past. So certainly that's a possibility that they will do it. There could be additional restrictions from COVID-19 where they had to shut down their factory for a couple of weeks, which could certainly hurt the production, at least in the short term. The other thing is Tesla's competitors certainly could advance battery technology and take some market share. Volkswagen, BMW are working, Mercedes, they are working very hard to try and take some of this market share. So that could happen. And then the incentive, Tesla, one of the big reasons people buy Teslas is because of the supercharging network, where Tesla's built up this network of superchargers all around the United States and in many parts of the world. And so it reduces the range anxiety. But if you have a competitor's battery that can give you 500 or 600 mile range, some of them are even working on 1,000-mile range, then you don't need to worry too much about supercharging, because the range anxiety is not that great. If you can go 500-600 miles on a single charge, I think the supercharger network is going to be somewhat diminished. And finally, the market for solar tiles and batteries, which is some of the other businesses Tesla's in, maybe does not grow as estimated. Maybe people are slow to adopt the solar tiles or the wall chargers. So those are some of the risks you should keep in mind. How to set a 5-year target price on Tesla. We learned what the annualized returns could be if you invested at current prices. We also learned what a good buy and a great buy price would be. A great buy price for Tesla would be around $535. And actually, if you bought it at $535 and it goes up to the $2,680 price target I gave you in 5 years, that would be an annualized return of 80%, which is amazing. But even if you invested at $765, you could still make an annualized return of 50%, which is still really great. Now, keep in mind, Tesla stock is not for the weak of heart, and it's highly volatile. In fact, it had come all the way down to 352 on March 18th, and it bounced back over 800 within 5 or 6 weeks. So this is a volatile stock. My overall recommendation is to add Tesla as a core holding and look for a lower entry point. So thanks very much. I hope you. And if you like it, please hit the like button, subscribe, and hit the bell icon. Thank you so much.